Live from San Diego, this is the Fox 5 Morning News at 7.
Another historic day on Wall Street, but it wasn't what we were used to.
Oh man, the Dow closed down nearly 1,200 points, the largest point drop in history. Financial expert Laurie Itkin is here with more. Laurie, oh man, you've been busy the last couple of days, huh? Good morning.
Absolutely. Good morning, both of you.
Okay, let's clarify this first of all, because the largest point drop in history, when you take it and you use percentages, it wasn't the biggest drop in history because 87 still has that title, right? Explain that, if you will.
That's right, Raul. I mean, as the Dow gets higher and higher over the years, the point drop may look big, like you said, but from a percentage standpoint, it's not. So, I mean, on Friday, we fell 2.5%. And then yesterday, another 4.5%. And this morning, it looked like to add on to that, but now we're in the positive.
Yeah, I want to take a look. These are a live look at the big board now. The Dow is up 132 points. Explain this. How did we go from what we saw yesterday? What are we seeing today? What does this mean?
What I can't understand is why is everyone walking around looking like they just got punched by Mike Tyson? I mean, we had to see this coming, right? I mean, we have had highs after highs after highs, especially since President Trump was elected. There was all this euphoria. And the way I look at it is if you're an investor for the long term, over the past 30 years, stocks have averaged about 8% a year, maybe a little more if you put dividends in there. But if you are constantly getting annual returns that are significantly higher, which is what we've seen, we've been in a 9-year bull market, right. You have to know that a correction is around the corner, so don't be surprised.
Were you expecting it at this time? What set this off?
Well, there's a few reasons for it, but again, markets are like this, they're ebbs and flows. But I mean, one of the reasons is that interest rates may be rising, and when interest rates rise, people who have money in stocks find there's another way that they can have a less risky asset and get some income, because bonds pay income, and bonds had very low interest rates and now they're going up a little bit, so they're a little more attractive.
And look at the graph, because even this morning it didn't start off normal, and it hasn't been normal. We started off when the markets opened at 6:30, we were down 500 points already. We said, oh boy, here we go again. And then it rocketed and it was up 240, and now we're up. People are trying to figure out when the world's going on. There are apps, there are logarithms. A lot of people invest with, they tell their phone, okay, if it goes up at a certain point, then sell. How much of a role is that playing in all this?
Oh, I think that's getting to play more and more of a role, right, because it's so easy. The computer, but it's really humans that are telling the computers what price to sell at. So there are people, this is risk management. If you're in stocks, they've gone up way up. It's actually prudent to put what we call stop losses, orders in. I've been trimming holdings as we've been going up. I trim, and yesterday I bought for clients. It's a great buying opportunity when things are low.
When you were just mentioning correction, and we've heard this term that the market is going through a correction. From what we understand, the Dow dropped 7%, but some say this is still not low enough to be a correction.
That's right, it's not. A correction is typically defined as 20% drop or more, a bear market 20% or more. And you have to remember, 2 years ago, this very time in 2016, over January and February, stocks fell 10%. It was a correction, and then look what happened. If you got scared and sold, you were really upset because you made so much money in the next 2 years.
I mean, is it a coincidence that this happens yesterday? Janet Yellen's last day was over the weekend, and the first thing the markets do is they tank. Does that, when the Fed chairman changes over, boy, when Alan Greenspan, it seemed like he was there forever, and then now we've had a little bit of a turnover. Did Janet Yellen's departure mean anything here?
It could be. I mean, the Fed, people don't realize this, the Fed has so much control over your money. They set interest rates, they do a lot of things, they control monetary policy, and people are always nervous when a new chair comes in, and she's done a great job over the past many years.
Laurie, before we let you go, if we could get that board up one more time, based on what we're seeing now this morning, what do you think is going to happen? What are we going to see over the next few days?
Oh, well, you should expect more volatility. I mean, just like we opened very low, now we're somewhat higher. You just need to be prepared, and as I always tell people, if there's any cash you're going to need in the next 2 to 3 years, like a down payment for a house, do not invest it in stocks. Keep it safe, because you can make money in the stock market and you can also lose money in the stock market. But over the long term, 401k, stocks are the best way to grow wealth.
Okay, I need one more piece of advice before we let you go. Let's say somebody has never been in the stock market. They're getting their tax returns in a month or two. Do they put it in the market now as a first-time investor or hold off?
Well, if they have credit card debt, I'd pay that down first.
Okay.
Always pay your debts down because you're paying interest to somebody else before
Okay.
you think about investing. And if you are going to put money in, try to do it in a 401k where you may get a match for your employer, or at least allow it to become grow tax deferred.
What if you can check all that stuff off the list and you have maybe some money that you're interested in investing?
If you're a if you're a long-term investor, 20 to 30 years, totally put it in stocks. If
Okay.
you're not, don't.
I'm gonna call you later.
Yeah, call me later, Ro.
I know who you were asking that question for. All right.
See, the volatility is what scares me.
Yeah.
Laurie knows. I told her. Thank you, Laurie.
Thank
Appreciate
you.
it. Oh boy.